Okay, more or less, what's happening here in the Philippines is that more than a month ago, the U.S. market is the Fed has already been pricing in a rate cut. So because of that, you can see that the market in the U.S. have gone up to new highs, and the reason for that is because when you do a rate cut, that means it's the 10-year U.S. Treasury. You can see that it has been going down. So when that thing happens, you have at that time it was 2.1 to 2.1% on the 10-year Treasury. So it's a risk on the emerging markets, and a risk off because you know that they can see the problem that they're having globally. That's one of the reasons why even at an all-time high, the Fed did a rate cut. So that means, what does it mean? That means the main street, even though the numbers today in the US is doing well, what happened is that they can see that the global market is slowing down. That's why they opted for a rate cut. So he called Powell, Fed chairman, called it an adjustment. First time in the last 20 years that they have a rate cut, wherein the unemployment is all-time low, 3.5, and then also the 10-year U.S. Treasury is also at all-time low, and then you can see the stock market at new high in the U.S. So we were already warning people that it's pricing in already a rate cut. So when you price in, meaning what does it mean? It means that if they cut, then the market will go up and then break down. And if there's no cut, then it can go even lower, right? So those are the challenges if you're you're Fed Powell, right? So the pressure also from the President Trump, forcing him to do a rate cut. So because of that expected rate cut, that means the emerging market have rallied, so including the Philippines. So that's why it broke out from a major resistance of 8.1, 8.2, it went to 8.4. The problem is after the rate cut, then you can see pressure coming also from this US-China trade war. And we have been saying all along for the last year is that this thing is going to be resolved, because I think the US is trying to do everything to slow down the growth of China. I mean, that's how we look at it. And because of that, automatically, all the overhang is there. See, the thing is that in the stock market is that when prices are high and you talk about a trade war, then it can go down. So when prices are down, you talk about a trade war, nothing's going to happen, right? So in other words, you have to understand what is priced in, what is not priced in. So today in the US, it's overbought because it went to a new high. It's overbought. So you're seeing now this major correction that's happening, right? So after a few days, if it's oversold, then they said, oh, we're going to fix this already, it's going to rally. So you will see a lot of this volatility, not even today, even going forward, you will see a lot of this volatility. Philippines naman, we talk about political crisis in the US-China trade war. We also have what we call the credit crisis problem in Europe, right? Because for the last 10 years, Europe has always been in a negative interest environment. So what people don't understand is that when you have negative interest rates, let's say in Japan for the last 30 years, it basically penalizing the saver, right? So the ordinary people have no income, have no additional income, even though 40-50% savers, but then there's no income. So that is the biggest challenge today. As far as the world is concerned, negative interest rate really doesn't work. I don't know if you can find a country that have negative interest rates, and basically what a lot of these people has happened is that they use the negative interest rates and start investing outside. So it's not benefiting the 99%. So 1% benefits out of all this. So the wealth will become, the rich will become very rich because they know how to use all this, what we call carry trade. They get negative interest rates, then they go outside, they go to emerging market and start investing 4, 5, 7, 8% return, right? So, but then that's only a limited people can do that, right? So you can imagine for the last 30 years, Japan, negative interest rates. So what happened to the domestic economy, right? It continued to have deflation, right? Because there is no increase in birth rate, demographics continue to deteriorate. Because how can you have children when you don't have income, diba? So those are the challenges of people. Europe is the same thing today. Now we're seeing a lot of negative interest rates, and they're trying to solve the banks that are. In fact, what happened is the Deutsche Bank basically have to lay off 18,000 people, which is way long overdue, right? They should have done it long time ago.